Kunal, coming to you first. Anything to worry about the markets right now, given that we've suddenly seen a downtick come by, or is it likely to be slightly volatile and largely range bound in the run up to the US elections and given the rise in COVID cases across the world, etc.?
So it's a mix of all of that. Currently, I believe that the markets are getting into more of a circumspect mode. And I think it's natural. I think this kind of a reaction from the market was something which was expected. You can't have the markets just about going in a vertical kind of a fashion, and that too when you're heading to one of the most talked about events, for the November series. And as it is, I think the markets have done exceptionally well for the last 6 months on a trot. Presumably, if we ignore what happened in the month of September in the second half. So I think in that regards, I think it's been an exceptional market. So it's more prudent from the market participants to try and go into more of a risk-off mode heading into the elections. I think post-elections, I believe that the normal routine would probably come back into the markets. We would again watch for those liquidity cues, either stimulus cues from the US markets or some sort of domestic cues in terms of results, etc. But I think in this regards, I believe that the markets are going through a bit of chop and churn today. This being the expiry week as well, and today tomorrow being the two crucial days for the expiry. I think that's also one of the other reasons why you are seeing this added volatility in the market. So I don't see any major reasons for a medium term or a long term investor to try and fret about. This could probably be a normal process of mean reversion, some process of chop and churn as well in terms of individual stocks and sectors. Now, should I go ahead with my stocks as well, Karnya? Okay, so I'll suggest two calls. Both of them are on the buy side, Karnya, and first one is the one HDFC Life. Now, this is very interesting because over the last 1 week, we've seen a steady recovery for HDFC Life from 560 levels to now 590. That generally indicates that that's a very strong demand zone for HDFC Life at the 560 mark, and I believe that this should be a gradual repair process for the stock. For two expiries on trot, the stock had underperformed, so generally we see a reversal which happens on the third expiry for such a kind of a stock. So I believe HDFC Life could be a stock which can get into focus not just this week, but I think for the start of the November series as well. Targets of 612 and stop loss could be kept at 580. The second would be a buy on Tata Motors. I think it's a very interesting breakout on Tata Motors. So yes, on the back of results, or the expected news flow, the stock is moving up higher. But I believe that on charts as well, it's looking extremely strong, trying to end almost a 2 month consolidation for the stock price. So I think this could be a big breakout for Tata Motors, both on the back of the news flow as well as on the back of the prices as well. Would term it as a high risk trade. Targets of 155, stop us at 135.
Okay. Hi, Gaurang. Good morning. What's on your radar today as far as a high risk and low risk idea is concerned?
Thank you, Varun, and morning to all of you all. So, with the FNO expiry tomorrow and the global news flows, US elections, and not to forget, I think Monday we had a deeper correction. Yesterday we had a recovery in terms of reflection of what we saw on Monday, and today we are trading with a little bit of flat to negative bias. Remain extremely positive on the markets, and like I mentioned during our earlier interactions, Varun, that all dips are a great opportunity to buy. Corrections like this are something that traders have to worry about, not investors. And we're quite optimistic that by the time we go towards Diwali, that is second week of November, we might be trading above 12,000, closer to 12,200. And not to forget, I think the Honorable Finance Minister are also given some positive indication in terms of another stimulus. So I think that should help the markets, and of course, not Q2 earnings is panning out much better than what our estimates were. So two long-term investment ideas. First one is SBI Cards. We saw the IPO, we saw the performance, then we saw the correction, and then we saw the earnings for the quarter gone by, and that has actually reinforced our confidence in our fundamental coverage as far as SBI Cards is concerned. We are working with a conservative target of somewhere close to about 980 Varun, but I'm quite optimistic that on the earnings front, I would not be surprised to see the stock going towards 1100. These are fundamental ideas, so please bear in mind you need to have at least 12, 16 months plus kind of time horizon. The second one is from the frontline IT pack. Again, a stellar set of numbers and continues the run rate in terms of performance. HCL Tech. Here we are working with a target of somewhere close to about 1050. And like I mentioned, if earnings improve, definitely the target gets revised upwards.